Good afternoon, everyone. This is Chrissy from SOLSTICE ATR and Vulcan Capital Research. I hope everybody's doing great on a Saturday afternoon. I look forward to seeing you. And by the way, do hit the subscribe button. I am at solsticeatr.com, powered by Vulcan. My Twitter handle is at Chrissy Farah and on Discord at ZOU pound 9345. Remember, all the stuff I do is for education use, illustration. We're not a broker dealer. Use at your own risk, and the data may not be copied or implemented or done something with it and shared by other people in the wrong way. So first of all, I'm looking at the S&P 500, the NASDAQ, the Russell, and the Dow Jones. I want you to understand to keep an open mind on the overall market, because you have to trade psychological. Trade what you see, not what you think. This is very important to me that you understand that. A lot of the guys try to, they hear news or they hear something going on in the market and they want to, oh, something is good, something is bad, and they want to go ahead and trade it without knowing what they're doing. Technicals are your friend. Use them for your advantage. Okay. If we can see, since February 22nd till March 24th, we eventually U-turned in April, took off, cleared the gap, the H pattern, we continued higher. We have filled basically 100% of the gap on the SPX as well as the NASDAQ 100 way back there. The Russell is doing that right now, a little bit more catch up. At the same time, the Dow Jones Industrial Average. The most important thing is to understand that the NASDAQ, I think there may be a little bit rotation from the tech sector. If there is going to be some biotech companies coming with secure for the COVID-19, it may have changed the dynamics of the equity trading. Instead of using the FANGs and the NASDAQ 100, things will shift into the small cap as well as the S&P 500. And I will go over a little bit more in detail. As you can see, we are still in a linear regression channel. We are away from the 18, which are going to cross, and the 50 simple moving average. Keep an eye what the market gives you next week. So let's first of all go over the Dow Jones Industrial Average YM, and I will go to the daily chart. We're going to switch that to a daily chart. And as we can see, we did a rounded bottom. We're creating a cup and handle. And this is a little tinier, rounded bottom. We're trying to catch up to get to this area here. If we clear this area, these are the two candles that took us down in basically February 24th. We grinded a little bit lower and eventually we fell down due to the COVID-19 and we recovered. We started recovering on March 24th. This candle U-turned and we took off. We have a smaller linear regression channel. We are still in an uptrend. As long as we can make it above the 27,625 to 500, we would be in the middle of this range where the Dow Jones Industrial Average would meet somewhere in this area. You can get to keep an eye on that channel. Between this one and this one, you can do an imaginary one. We can put one up here just to give you an idea how it looks like, so you can see it, and that will give us an idea. Hey, we can head up there, and if we do end up losing that area, there's nothing wrong with it. Things do tend to change, and you can see the linear regression channel is somewhere. You have to center it more or less. It should be about somewhere in this area. So that's the YM. Let's take that channel out of the way, because I don't want it to be there, and we'll go over some other stuff. Let's take a look at the NASDAQ 100 /NQ. And I'm using the strongest one out there. In the last week or so, as you can see, the NASDAQ has fell down, came back up, fell down, came back up. And in this last week, the last 5 days, we had a down day, an up day, a neutral day, a little down day, do a catch up. Since Monday, we grinded up, we came back in a little bit. The NASDAQ is doing a catch up. But if you can do a linear regression channel between here and here, and we have one between here and here, we are in an uptrend. Keep an eye off that, cone. Do we continue higher to get to the top? I did not put the double extension, I kept the old, a prior breakout here to this area here in the Fibonacci. I used the 2023 and I used the 161 fib, that 11,650, 700 area is very critical, but if you put the 50 Fibonacci right in between these areas, should be about 11.5. So that's the NASDAQ, and eventually, you can think if there's going to be a change in the trend. The NASDAQ is acting a little different than the small cap, and I will show you the small cap RTY, or you can use the IWM. So as we can see here in IWM or the RTY, eventually we're still in that linear regression channel climbing. The midpoint is somewhere in this area. If we put a line in this metal, it's going to be somewhere in that area around the 1650. If the Russell needs to do catch up, we eventually broke out of this area, and we did catch up to this area where that H pattern where we fell down. These are the candles that took us down. If the Russell needs to do a catch up, it has to come back to the 1650 in this area in order for there'll be a change between the NASDAQ 100 and the small cap money starting to move into a small cap. I'm not saying it will, but this is something you have to keep an eye on. Let's take a look at the ES, the S&P 500. As we can see, the S&P 500, I do have that linear smaller regression channel in here, and I had this prior cone going up, and we eventually broke out of that cone in the upper distribution and uptrend. We do still have those gaps down here, and the 50 SMA, as you can see, it's around the 31, 65, and the 18 simple moving average or the channel, if you use 20, it's 32.50. So we're going to keep an eye on what the S&P 500 does. As you can see, we have that smaller linear regression channel, and I did connect these couple of dots here. We tested them. We look like we're going higher, and if it does get rejection, look for the middle range for clues at the 1323, 1320 area. 3323, 3320 area. It'll tell us something, and if they really want the Dow to S&P to do the catch up and go all the way up to the prior annual high, this was the prior high on the S&P 33.9750. If it wants to catch up and break above it, look for that area. The 3400 would be a better target than coming back down. But if things do change, trade what you see. Okay, let's take a look at GC. And this is in the gold area. We finally I'm going to go to the monthly charts instead of the daily charts. We're going to go from daily, we're going to go to a maximum time frame. And we're going to go from daily to a monthly chart. I want you to understand that we have finally, do we have it right here? Come on. It should show it here. On the GC, the contract, or the GLD, which is the ETF for the fund, we eventually double topped and we cleared this prior high. My concern that gold is a little bit extended with silver, which is the SLV or the /SI. What I want you to do, pay attention to the 2025 area, and at the same time the prior breakout, which is around the 23% fib, which will match this one right here. If you can see, it's 1923.7, and if you can see, the 23.7 fib is 1935. I'm not saying that it will come back down, but keep an eye for some kind of a reset before continuing higher in gold, and I'll show you the weekly chart on it. Let's go to the weekly. As you can see, that push up, we hit almost the 50%. We're coming back to the 38% fib. If it does not hold the 38% because it broke out of that channel, or if you connect these lines all the way up, you basically broke out. This is your line, and the same for gold. And if I go to the 4-hour chart, it's starting to look like it wants to come back a little bit in before continuing higher. And this is a major area here for gold. As you can see, on the 4-hour, it went through the 18 simple moving average or the 20. It's just underneath it, and we have the 50 SMA where the first breakout. If we connect those channels, that would be a very important area, and that 38.2 fib. This is why I'm showing you gold. If I look at silver, let's take a look at /SI, or you can look at SLV. It's a similar situation. You broke up. We had to consult. We pushed up in the overnight, on Thursday, and on Friday it sold off and hit the 18 SMA holding very well. Your 50 SMA in the prior breakout was the 26 and the 24 area, where that 23 set when it took off from here, that was the consolidation for 5 days. This is the breakout. We looked up and coming back in. Keep an eye on it, and let's look at it on the daily chart so you can see that. As we can see, that silver, I mean, it didn't do what gold did in the prior years, in 2001, where it was at $50 range. We can go back in history and look at it. I think, it's doing some catch up, and it did very well for itself. Don't get me wrong. Let's go to a maximized time frame, and we can go from daily to monthly and push OK. And you can see that silver was in prior high. See this consolidation? This was the zigzag pattern, and eventually it fell down. It's coming back to the same area where it broke down from. See, we retested it, looked above it, and coming back through that candle. If it cannot clear that engulfing candle in this one, we'll look for the reset for the backside of the channel to continue higher. It'll create a cup and handle. Most people are looking at the upper section of this distribution here. I mean, could it continue straight up? Yeah, possibility, but keep an eye on it. Let's now go to AAPL, and I'll start going through one by one very fast, and I'll take some other stuff together. As we can see, Apple, from that prior breakout and that consolidation when it retested on the earning report, it has done very well. And on Friday, it basically sold off. We had those 5 days. We do have this gap here and this gap here because of the announcement that they're going to do 4-to-1 split. Apple tried to run for the 450, 500 area. It's coming back in a little bit. Keep an eye on the technicality of Apple, because you had that breakout. You have an island here, and then we have an island here. I'm not saying it can come back, but make sure that if there's rotation from the NASDAQ, Apple is one of them. Let's take a look at Amazon. And Amazon, yeah, as you can see, I do have a couple of fibs on it. This was last week's action. We pushed up on Friday. This is Monday, Tuesday, Wednesday, Thursday, Friday. If Amazon cannot stay above the 3250 area, I think the backside of the consolidation is your prior breakout, which is the 50% fib, the 18 SMA, and the backside of this channel, the 61, or this channel will catch up with it in order to get a bounce. And if it doesn't, keep an eye on it. Let's take a look at Facebook. And Facebook, had an inverted reversal hammer. As you can see, this was a great call on Friday. We called it in our chat room on Discord, and we said, hey, if anybody's, take some profits at the 277.92 and get out of the way and go short. We called the short at 277.92. We tried it twice. The third one did work very well, and we eventually fell back down to the 273, and we got some good money out of it. And look where it did close on Friday. It closed right at the 260. I'm sorry. We'll just move my mouse out at the 268.44. Yeah, I mean, it's halfway between the 23% fib and the 161. If you can put a middle range, that's the middle of it. In order to continue, it has to get back to the 50 Fibonacci, or comes back, redraws back down to the prior breakout of this candle, which is this island here, which had the push up after the earning, 3 consolidation, breakout, looked above to the 161 and came back in. And I did not change the fib on purpose, because I was looking for the extension to go higher to that level and get a reversal. That's Facebook. Take a look at Google. Google is, in consolidation, similar to Amazon, not doing much. It's in a wedge coming down. It's trying to break up. It did hold the upper distribution channel higher, that linear regression channel. We do have one. It went, looked above, couldn't clear that candle, which is that 50% of this candle. It looked to it and eventually fell down and closed a little bit lower. So keep an eye on this channel and the 50 simple moving average, because your 18 simple moving average in that 1520 area is going to be a very critical area, 1520, in order for Google 1525 to continue higher. If it falls back in, look for the backside of the 61.8. Let's take a look at Netflix and FLX. And Netflix, as you can see from the after the earning report, I kept this Fibonacci on purpose after that report. This is your report. You had that island. It pushed down to the channel, came back up, pushed down, came back up. And if this time it does not hold the channel because it's been tested so many times, you know, your 50 SMA would be a great area. Then eventually the 116 and the 50 Fibonacci for a long and Netflix. But we're going to trade what we see and trade what you understand in technicality. Try not to be a hero when you're trading and be biased to one side. Let's take a look at Tesla. Tesla is in a similar situation after the earning report. It has not been able to go to that 1700. It fell down from that prior high to this low. You can see that candle took it down. We have not been able to take out the 50 Fibonacci. We've been retesting all the time that 38 or 61 Fib, and it's been going up to it and getting resistance. It has been baselining for basically 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Eventually, if it does not hold the 1429, 1430, it can see the 1336, break through it, get back to the 123. This will fit part of this gap between these two candles and this one here. This is an island, and we got one right here on after that push higher that Tesla was doing good sales in the last couple of months. So this is Tesla. So what I'd like to do is go over the bond market. You can use the TLT or ZB. The TLT is the ETF for the bond market. And as you can see on the daily chart, it's starting to get rounded up. And if I look at the weekly chart, the TLT seems to be baselining for a move. And if there's going to be inflation, and this is an inverted hammer, or I can look at the ZB, which is the 30-year treasuries. This is a 20-year combination of the 10 and 20, the TLT. If you look at it on ZB, I think we are heading towards an inflation issue because the Federal Reserve Board is not saying much about it. They keep printing money, trying to keep this economy up and running due to the COVID-19. But if they can find a cure by after summer, by October, things will start to shift a little bit differently, as well as the employment rates and stuff like that. So that's ZB. And what I'd like to do is show you is the large cap, which is through Schwab, SCHG. And as you can see, this is the Strategic Trust US large cap. As we can see, similar to the NASDAQ, most of those large cap growth companies or ETF funds have been holding a lot of the things in them. They're not holding an overall sector of the S&P 500, you know, different companies or the small cap. Everything shifted to those large caps since the lockdown and really pushed higher. I would like to see if there's going to be a shift a little bit in the industry from one sector to the other sector to get a little bit more balanced. This is why I'm showing you that. And at the same time, I'm going to show you the retail, which is another ETF, XRT. And, you know, since people are at their home, this was last year's, you know, before the 2019, we had a 52. We fell down in 2019. We went sideways. This is the February drop. We actually caught up because people are spending money sitting home doing nothing. So whatever the paycheck they're getting from Uncle Sam or the Federal Reserve Board on their unemployment, they're going up on a shopping spree, and we are catching up to the prior high on the retailers. And I would like to show you one other one, which is the XLP, which is the trust consumer staples. And as you can see, the consumer staples, we fell down, came back up, we consolidated around that $60 range, 62, and eventually we broke up to that prior candle. As you can see, the body, we haven't been able to take it. Eventually, I would like to see it catch up and eventually fall down. These are the reasons why I'm showing you different rotation, different instruments at the same time to help you out understand what we are looking for. So I'm going to go back now to the S&P 500, break it down a little bit, detail in volume, the profile, the channels, and at the same time, look what can be the outlook for the following week. So this is the weekly chart. As you can see, it's trying to break out of that linear regression channel, trying to get to the 33.97. And if it looks up and comes back in, that would be great. Keep an eye on it because there will be rotation. We can go to the 4-hour. As you can see, I have between here and between down here. And as you can see, we've been grinding higher. Last week, for the last 2 weeks, we consolidated in this area, and eventually on Monday, Tuesday, Wednesday, Thursday, Friday, we kept grinding a little bit higher than the NASDAQ did. We are holding the 18 simple moving average. This is why I said keep an eye on the 33.23. Doesn't want to look a little behind. It may continue. Remember, we got to the 47. We broke through that 47 on the overnight high, which was around the 47 quarter. And at the close, we touched the 47 quarter and closed right up there, just slightly above the Thursday's high. If this is going to continue, that would be great. Keep an eye on that area, the 34, 35. And if we fall to the 23 and we cannot hold it, and we can't hold the 18 simple moving average, look for the 38% fib. The 50% fib, which is and then here you have the 50 simple moving average, the 61.8, will do a nice catch up, which is this baseline here of the upper distribution, and the 78 may hold. If not, we'll look for the 61 in the back side of the 116 SMA and the major breakout from way back there at the 32.30. I'm not trying to be bearish, I'm just showing you one side of it. If we're going to break up, we do the extensions on the weekly bar from this high to this low. Where's the low? Monday to Friday, Thursday, Wednesday, Tuesday, and this is Monday. If I do not count this area here and I just grab the Monday, 1, 2, 3, 4, 5, this is the low. I can take the overnight or I can take the trading hours. What I'll do, I'll grab the Fibonacci from here. We go get a fib. That's your Fibonacci. We grab this low here. And we grab this high here, which is the 47 quarter. Or we connect it, and this has the extensions to the upside at the same time. And what I'd like to do is zoom in this area so we don't have to go that high, so you can see the levels. As you can see, the 23 is 33.11, the 38%, the where is it? That's a zero. Sorry, that's a zero. That's your 23%, your 38, your 50, and 61.8. This was the prior high. This is why I'm looking to continue higher and break out of this channel. If it doesn't, we'll look for the inverse relationship back down to here. So you have both sides of the sector. If it breaks up, we look for here. If it breaks down, we look for here. So either way, you get the 50 and the 61.8, or the 50 and the 61.8 on the top, and the 38 and 23, or you'll do the 23, 38, 50, and 61, which would be part of the 38 and 50 down here. So trade what you see, not what you think. And if you need any help, ask us how. We'd be more than happy to help you. And take care. Look forward to seeing you on Discord or Solstice ATR.